I'm sure you've heard the news, debt is bad, right? Wrong. Yo, what's up everybody, it's Money Matters. We're diving deep into a topic that might seem counterintuitive, but trust me on this one. Making money with debt. Most people think of debt as this big, scary monster, right? But what if I told you that debt can be your secret weapon to wealth? Stick around as we uncover 5 powerful strategies that self-made millionaires use to profit from debt. I'm talking about leveraging your way to financial freedom, building passive income streams, and even launching successful businesses, all by strategically using debt. It's all about working smarter, not harder, and today, I'm breaking it down step by step so you can start implementing these strategies in your own life. We're going to be talking about real estate, business investments, and even some mindset shifts that can help you get ahead. So, if you're ready to change your perspective on debt and unlock a whole new level of wealth building potential, hit that like button, subscribe to the channel for more financial wisdom, and let's get started. First up, utilize leverage. Self-made millionaires understand the power of using debt to amplify their investments. Think of it like this. You wouldn't buy a house with cash, right? You'd get a mortgage. That's leverage in action. You're using borrowed money to acquire an asset that, hopefully, appreciates in value over time. Now imagine applying that same principle to other investments. Let's say you have $100,000 to invest, and you find an opportunity that has the potential to return 10% per year. If you invest your $100,000 outright, you're looking at a $10,000 profit. Not bad, right? But what if you used leverage? Instead of investing your own money, you take out a loan for $100,000 at a 5% interest rate. You now have $200,000 to invest in that same opportunity. With a 10% return, you're looking at a $20,000 profit. Now, you do have to factor in the 5% interest on your loan, which comes out to $5,000. But even after paying that, you're still left with a $15,000 profit, a 50% increase compared to investing without leverage. Of course, leverage comes with risks. If your investment doesn't perform as well as expected, you could end up losing money. That's why it's crucial to do your due diligence, understand the risks involved, and never invest more than you can afford to lose. But when used responsibly, leverage can be a powerful tool for building wealth. Next, consider investing in income-producing assets. By using debt to acquire properties or other assets that generate cash flow, you create a passive income stream. Over time, this not only helps you pay off the debt, but also builds your wealth. Real estate is a classic example of this. Let's say you buy a rental property with a mortgage. The rent you collect from tenants covers your mortgage payments, property taxes, and other expenses. Ideally, you'll even have some cash flow left over. As you continue to make mortgage payments, you're slowly building equity in the property. At the same time, the property is likely appreciating in value, and your rental income might even increase over time. This means you're paying down debt, building equity, and potentially seeing your asset appreciate, all at the same time. And it's not just limited to real estate. You can apply this strategy to other income-producing assets like dividend-paying stocks, businesses, or even peer-to-peer lending platforms. The key is to find assets that generate consistent cash flow to cover your debt obligations and provide a healthy return on your investment. Now, let's talk about taking advantage of low interest rates. When you borrow at a low rate, you can invest in opportunities that yield high returns. This strategy maximizes your profits and is a smart way to grow your wealth. Think of it like this. Interest rates are like the cost of borrowing money. When interest rates are low, the cost of borrowing money is also low, making it an ideal time to take on debt, strategically of course. For example, let's say you find a business opportunity that you believe has the potential to generate a 15% return on investment. If you can secure a business loan at a 5% interest rate, you're essentially pocketing the 10% difference between your return and the cost of borrowing. That's a pretty sweet deal. Of course, it's crucial to be mindful of interest rate fluctuations. Rates can go up, and that can impact your returns. That's why it's essential to have a solid financial plan, factor in potential interest rate hikes, and make sure you can comfortably manage your debt obligations, even if rates rise. For our fourth strategy, use debt to fund business ventures. Entrepreneurs often leverage debt to finance their ideas and seize growth opportunities. This can significantly increase their chances of success and allow them to scale their businesses faster. Starting and growing a business often requires significant capital. Instead of waiting years to save up enough money, entrepreneurs can use debt to access the funds they need to get their businesses off the ground. This could involve securing a business loan, using credit cards strategically, or even seeking out angel investors or venture capitalists. The key is to have a solid business plan, a clear understanding of your financials, and a realistic projection of your revenue and expenses. Investors and lenders want to see that you have a viable business idea and a solid plan to repay the debt. Remember, using debt to fund a business venture is not about taking on unnecessary risk. It's about strategically leveraging financial tools to accelerate your growth and achieve your entrepreneurial goals. Finally, a disciplined approach is crucial. When using debt to make money, it's vital to have a well-thought-out plan. Managing risks effectively will ensure that debt works for you, not against you. First and foremost, never borrow more than you can comfortably repay. Debt should be a tool for building wealth, not a burden that keeps you up at night. Before taking on any debt, create a realistic budget, track your spending, and make sure you can comfortably manage your existing debt obligations. Second, have a clear investment strategy. Don't just borrow money because it's available. Identify specific investment opportunities that align with your financial goals and risk tolerance. Do your due diligence, research thoroughly, and seek advice from financial professionals when needed. Third, diversify your investments. Don't put all your eggs in one basket. Spreading your investments across different asset classes can help mitigate risk and protect your portfolio from market volatility. Lastly, remember that patience is key. Building wealth takes time and discipline. Don't expect to get rich quick. Focus on making smart financial decisions, managing your debt responsibly, and staying patient with your investments. So, there you have it. 5 proven strategies that can turn debt from a liability into an asset. By understanding and implementing these techniques, you can follow in the footsteps of the wealthy and harness the power of debt to build your financial future. Remember, debt itself isn't inherently good or bad. It's all about how you use it. By using debt strategically, you can amplify your returns, create passive income streams, and even launch successful businesses. Just remember to be responsible, do your research, and never borrow more than you can comfortably repay. If you found value in today's video, don't forget to like, share, and subscribe for more insights on how to make your money work for you. Thanks for watching Money Matters, and until next time, keep thriving.